Welcome to the Token Engineering Podcast, a show about AI economics and the cost of thinking from Neurometric on the Tokenminning movement, which is the discipline emerging to make every unit of AI work cheaper, faster, and more reliably. And for some of our listeners who've been here a while, you'll notice we're rebranding from Inference Time Tactics. And we've got a lot of news from this month. So we've got Rob, our CEO, here today to talk through it. Rob?
Yeah, glad to be back on the podcast for a while. And I think it's exciting that we're changing the name to something that's so timely.
Oh, yeah. So it was written about in the New York Times about a week ago. So you want to talk us through the big news and how we're going from tokenmaxxing to tokenminning and what that means?
Yeah, as a joke, when we first heard the term tokenmaxxing, we just bought the domain Tokenminning using the minimum number of tokens. And I thought I would use it as an April Fool's joke or something like that. And this tokenmaxxing stuff really took off. And, I think the reason that it took off is that CEOs were trying to figure out how to tell who was good with AI and who was using AI. And so they were like, well, whoever's using the most tokens might be doing that. But, there's this, what's it called? Goodhart's Law, which is when a measure becomes a target, it ceases to be a good measure. So when people were just doing their own thing, you could measure their tokens. But once you, and that would tell you something, but once you decided this is the target, use a lot of tokens.
It's going to be in your performance review.
Yeah. Suddenly people are doing all kinds of stupid shit to just use as many tokens as they can. So, but even without that, you should try to be efficient in your token usage as you are in every other area of your business. And so we actually decided to do something with Tokenminning as the Tokenmaxxing took off. And so we launched a website, tokenminning.com, with a manifesto, with a Reddit group, with a newsletter. And the newsletter's exploded. I mean, we're getting a lot of signups, dozens a day. And what it does is we send out a weekly newsletter with lots of articles, tools, tips, research papers on things that can lower your inference costs and help you be more efficient with tokens. So yeah, that's the Tokenminning side of everything.
So how do we know that the market was going to shift from maximum token use to token efficiency in engineering?
Yeah, it's a little bit lucky, right, that we started the company a year and a half ago on this idea that we were focused on test time compute algorithms, which are all the algorithms that AI models use when they're doing reasoning tasks. And while the opportunity wasn't there that we initially thought to make it easy for, to add test time compute to any sort of system, I think it did center us around this idea that reasoning algorithms were going to become a thing, that agentic was going to become a thing. Because what's happened is chatbots, particularly chatbots for search, was the first killer AI application. That's what ChatGPT was, right? Conversational search, and that requires an LLM, and that had one sort of focus. And agentic is very different. These agents need to do specific tasks, and just like your business, anybody who runs a business, you would never have a bunch of high-paid, brilliant, multi-PhD generalists doing every task. There's a use for those types of people, but mostly you want specialists who are trained at the appropriate level and cost at the appropriate level for the task that you need done. And so the same thing is going to happen with these AI agents and these steps. And so it became pretty obvious to us that if you tried to build those agents using frontier models under the current way of thinking, is just not going to be economically sustainable. And we've seen that in our customer base. I mean, we joke that we have very interesting dichotomy in terms of how we segment out our customers. Most people segment them by industry that they're in or company size or some characteristic like that. We segment our customers in terms of, is your AI expense COGS or OPEX? Because if it's OPEX, it might be more tolerable. It's making people more productive. You can compare it to salaries. But if it's COGS, it affects your gross margin. And those are the customers that we really see diving in, is the people that are, spending a couple $1 million a year on frontier models, and they've tried to do things to make it more cost effective, and they've only been mildly successful. And they need you can't go raise money, or you can't go public with like 30% gross margins as a software company. So
yeah, and not just millions, it's like tens of millions of dollars per
Yeah.
like simple task, right? I think there are a few things to unpack there because early on in any entrepreneur's journey, I think there's a misconception where people are like, oh, you're just hard-headed and don't listen to the market. I think the opposite is true. Like if you think about the journey to today, these are like time-tested principles where everybody else is saying, no, this time it's different. Goodhart's law doesn't apply.
Yeah.
Oh, no, this time's different. Supply chain risk management doesn't matter with intelligence. Oh, no, this time we can get general intelligence. It's going to be faster, smarter, and cheaper. And we're going to get all those things at once. And you're like, I don't know.
Violates the basic laws of physics.
Yeah, why don't we just focus on physics and the computer science says, and it turns out if you specialize in intelligence, you can get faster, cheaper, and more accurate performance.
That's
right?
the piece that I think people don't understand. That's the piece that we hear. The Frontier Labs have done such a good job of branding their models as the best that I don't think people realize you can almost always beat a frontier model with a smaller specialized model on any given task. You just can't beat it on all the tasks. Like these models are good at doing all the tasks 80% effectively. It's much, it's not that hard to do. We trained a 4 billion parameter model. So for people that don't know, you measure model size in the number of parameters that it has. And the current frontier models are in trillions of parameters. So we're taking models that are 1,000 times smaller and beating those frontier models on certain tasks. But the key is that task is the only thing the model can do.
Yeah, and so you really need the frontier. It's not an either or, right? This isn't a zero-sum kind of race.
It's an engineering systems design problem.
So you've got the frontier pushing the capabilities, and then you need to specialize, right? And so that's something that we will encounter over and over. Sometimes diligence or things. It's hard for people to really grasp that it's not even a big deal to say, but people can't really understand it. It's very simple. Specialized intelligence, it's faster, cheaper, and more accurate. Goodhart's laws apply.
Yeah.
And when we talk about tokenminning, it's not about limiting intelligence. It's not just a cost play. It's about getting the right model for the right task. To
the ROI
better,
on your token spend.
Exactly.
Yeah. So, you want to measure, and this is what our platform is moving to. Well, this is the other news that we sort of brushed over, but we launched yesterday a token engineering platform. And I think it's the first of its kind. And what it does is it takes all these point solutions that people have built about, being able to fine tune a model, distill a model, cache some of your, token inputs and outputs that are commonly happening. It takes all these tools and puts them together in a single platform so that they can share context, be more efficient, and so that you can get a single view across your entire system, regardless of where you're hosting these models and what types of models you're hosting, about what's going on. And then you can start to measure. That's the first step in being able to measure like intelligence per dollar or intelligence per watt or whatever you want to measure. But it's like, this is what we're going to get to, right? Is like units of intelligence are going to tie loosely to token usage. And that's what you're going to want to measure as an AI company.
And alongside that announcement, we mentioned some funding. It's probably worth mentioning some of the backers on this thesis and what's gotten the market to catch up. What's changed in the thinking with investors?
Well, I think we had a hard time raising money for this company in the beginning because most people told us that nobody cared about inference costs, which seemed insane to think that wasn't going to come really, really quickly. If not at least someday. But we had some good backers. Alex Binnick from Encoded very early on, I think saw that this was going to happen. Ginny Fielding from Everywhere, and Taylor from Abstraction.
Yeah,
Taylor Clausen basically had an SLM thesis before he met us, which is really rare. We didn't see that very often. And then and there's some people, Jason Kalkanis and Dharmesh Shah, have backed every company that I've done. So I've always appreciated their support. And Vermilion Cliffs, which is a fund here in New York, sort of came in really quickly, asked some good questions, and I think was a little skeptical, but very quickly came around and was like, totally makes sense. We should place a bet here. It's funny. The Jenny's thesis was really, really interesting, which is as a small fund, she told me, she's like, we can't compete on the obvious things that are going to happen because, the big fund, General Catalyst and Battery Ventures and those guys will just pay through the nose for a seed round. They don't care. And, they're playing a very different game. So these small funds a lot of times have to take bets on, this is sort of counterintuitive, but if it happens, it's big. And so I think some of our investors came through that as well, had that mindset.
And some of the ones that didn't, I remember one partner was so frustrated with this committee. He's like, there's just one holdout vote. He's like, why is the burden of proof that cost matters? And
this is like business 101 is your cost structure matters, right? It's like, it's crazy that people would think it doesn't matter.
Headlines with Anthropic and OpenAI. And it's compelling when you read the news. Who's going to win, Anthropic or OpenAI? It's a winner-take-all market, which is just
and then when people are like, oh, but inference costs are going to zero, you're like, then are you shorting Anthropic and OpenAI when they go public? Because what's going to happen to their $35 billion in revenue or whatever they have if inference costs go to zero? I mean, the whole thing doesn't make any sense. And you can tell that just people have not thought through this logically or thought through it from first principles.
Right. Jevons paradox.
Exactly.
Why is this an exception to that? So as even in our customer base, we're seeing customers, they get off the frontier. We move them from 70% accuracy to 98.5% accuracy at 15 to 20x reduction in cost. And they're like, wow, I thought it was a cost play, but this is better. Here's 5 more endpoints that I need. But then do they stop spending money with the frontier, or do they shift that to something the frontier should be taken care of, right?
Yeah, it's an engineering problem. You should use frontier models for frontier tasks, and you should use mid-tier models and smaller models for tasks that they can handle, just like you would do with look, you wouldn't use a supercomputer to run your website. You don't need it. You need a supercomputer to simulate a nuclear bomb explosion or, for drug discovery. And it's the same thing. And I don't know why it's been so hard for so many investors to grasp.
Right. So in every new technology, as we push the frontier, new crafts emerge, right? And so why is this different? Like, what's the new craft? Like, we've had DevOps and FinOps emerge. We've had UI UX for the product folks. What new type of, and I know we've named it, but for our listeners, what new discipline has to arrive?
I think token engineering is going to be a thing people think about for a long time. And I think it's going to take a lot of twists and turns in what it means over the coming decade. I think for starters, I think it's just going to be, are you using the right tokens on the right models? And then I think it's going to be, it's going to move to more complicated issues like are you using the right tokens for the right tasks? Are you caching the tokens when it makes when it makes sense? Then it'll get to the point where are you, because this will all become more dynamic. So in 5 years, I don't even know, this will probably be agentic and autonomous, and you probably won't be deciding what models to use. Probably a system will be doing that for you. I mean, hopefully it'll be a system that we build. We'll see if we can get there. There's a lot of things that have to happen, but you can imagine your AI infrastructure just becoming autonomous, and you point it in a direction, you give it some goals, and it sets up model endpoints and designs AI infrastructure to meet those goals. And as those goals change, and as the capabilities that are possible with AI infrastructure change, the system just adapts. I mean, I think that's the vision that everybody wants to get to.
Yeah, and I think this is really important. Like, every company is an internet company, mobile company, now becoming an AI company. And when artificial intelligence is embedded in your critical infrastructure, you become a token company. But none of them have a token engineer today. And the evolution matters, right? So some of these things you can just predict using reason. And so a year ago, the headlines are 95% of corporate pilots fail. Mm-hmm. It's not going to work. But that's kind of retarded, because what about the 5% that are working? Let's go double click on that and see the trajectory. So as things move forward, those pilots are moving to scale. When they scale, what price becomes a concern, right?
Yeah.
And then as you scale even with one vendor, and those vendors have their own incentives and dynamics and things that are going to move in a different direction to the customer. So then you start to abstract away your system from just one vendor like Anthropic or OpenAI to leveraging Anthropic, OpenAI, and many, many other intelligence providers like us. And so the future is here. It's just not evenly distributed. So these are things I know we talked about early on, but do you want to, talk about that insight and some of the companies that have moved in that direction? Because I think for some listeners, they're like, I don't have to think about this. I just work with one vendor and they'll have the token engineers.
Well, it's going to be difficult to work with one vendor unless you have simple use cases, because ultimately what's going to happen is this boils all the way down to the hardware layer, right? Where people write custom kernels for certain use cases, for certain GPUs. And so the infrastructure providers are, have their own form of competition. So why do you choose Modal versus Base 10 versus Together AI? And it's, it comes down to how much you need, control versus cost versus throughput versus you want certain things done for you. And, and so they have to make decisions to optimize their systems for certain use cases. And the thing about inference workloads is they're going to vary tremendously, because the number of things that you can apply intelligence to in the world, the number of problems is vast. And so I don't think there's very many people. Companies like Google will do it all themselves, but there's very few companies that are that technical and have the kind of infrastructure where they're going to do everything themselves. And so what they're going to need is they're going to need to understand from a platform like us or one of our competitors how to make a decision, like, should this workload run on Fireworks? Should this workload run on Together AI? Should this workload run somewhere else? Should it run on its own local device? I mean, that's going to be interesting. And token engineering a lot of times is going to be about, do you run this token in the cloud or on device, and why?
And we've seen, like, firsthand some people who've built internal tools like this at leading tech companies say, everybody's going to need this. Let me angel invest.
Yeah.
Right. And others have come out just now publicly, like the chief data officer of AT&T said, as we built an in-house solution, but as industry tools emerge, we're going to deprecate these and adopt that, because like this is not what they want to do. And I think it's important to talk about why this isn't just a one and done thing. Why is this a platform need?
Yeah, I mean, because models are changing all the time. There's new models coming out, and we're still in the early days of this for all the models that we have. There's a lot of people that think the existing transformer architectures won't get us to AGI. And so that means you're going to have new architectures coming. I mean, Jan LeCun left Meta and raised several $100 million for a company that's working on a new type of technology called world models. And he used a technology called JEPA, JEPA. And so as these new types of models come out, you as an AI practitioner have to decide if it's worth your time to test. That requires setting up some infrastructure and all this kind of stuff to evaluate it. And I think what's going to happen is you're going to want a platform like Neurometric's token engineering platform to just make that easy for you. Constantly run and test all the new tactics, all the new models, all the new ideas that come out, and figure out what works best for your use cases, because it goes back to what I said at the beginning, which is these inference workloads are very, very different and very fragmented because there's so many use cases for intelligence.
How do you test this? Like, you want to talk a little bit about Harbor and how that plays a role in this space?
Yeah, we have a unique data set around task-based AI. And the reason that we look at it at the task level is because that's the level where the business governance happens. So when you need to do something like email summarization or sentiment analysis of customer support tickets or named entity extraction from certain documents, those tasks are defined by business goals, and they don't change very much. They change very slowly over time. Everything else in that stack changes really quickly. Your prompting techniques, the models that you use, and so I think it made sense. It makes sense to work at that layer where your business governance is stable and you abstract away the volatility beneath that layer. So that's why we decided to work at that layer. So then the question becomes, well, how do you get a data set about that layer? How do you get data sets about tasks and how they perform, and build evals that you can run against all these different models? And we did that by partnering with a open source project called Harbor. Harbor's run by the Terminal Bench team, and it's a collection of agentic evaluation data sets that are easy to containerize and spin up and run. And so we ran 15,000 Harbor tasks across a bunch of different models to understand what tasks small models could do and what tasks small models couldn't do, and sometimes which small models do the task. So some of our customers have tried to solve their problems with small language models, but the models are really, really finicky. And maybe you're familiar with the Gemma models, and the Gemma models don't work well on this task, but the Quinn models do, or maybe the Quinn models don't, but the Mistral models do, or maybe the Mistral models don't, but the Graphite models from IBM do. And that's the stuff that we have data around, and that's the stuff that we know. And I think people are surprised sometimes that we can have the impact that we have, but I mean, this is all we do all day. So that's why we know a lot about it.
So and this is what we do all day, but this isn't limited to us, right? So as we zoom out to the industry level, how do you see this being beyond a neurometric type thing?
Well, there's a lot of stuff going on. The Linux Foundation has this FinOps group that's looking at tokens now as an issue and trying to help build. We're doing some of the similar work to what we're trying to do at tokenminning.com, which is expose frameworks and ideas and tools, techniques that help manage and understand and provide visibility into your token spend, and then help promote sort of best practices around token engineering. And I think you'll see some other companies do that. We've done a lot with. We've talked to a lot of other companies in this space. Scaledown.ai makes some small language models for certain types of document-related use cases, and so I think this idea will catch hold as there's more and more people out there talking about and showing the benefits and filling in this sort of vast, white space that's in the inference optimization market right now.
Huge TAM, like the limits on human intelligence and the market opportunity there is huge. And every time something like this emerges, you do need that industry level, neutral kind of playing ground where then you have all these other players popping up at the same time who put their own, angle to it. But this is really an industry problem and very important. So, kind of before we wrap, I want to think about this through the broad lens of enterprises. So starting at the top, if I'm a CEO, like, why do I care about this?
Because as a CEO, your job is to think about trade-offs that the company makes. And so you want to understand how they are thinking about, if tokens are units of intelligence, you want to think about, are you doing the right thing? Are you spending, just like as a CEO, you want to think about your core competencies and your strategic advantages. And those are the places that you want to double down and spend more money and more focus and hire the best people and everything else. And then the things that are non-core to your business, you want to outsource, or you just want to, get the basic, for most businesses, printing and your copy paper is like not, you just want average outcomes, whatever. Now, if you were a business that thrived on making flyers or printing newspapers or something, it might be very, very different, right? So, so every CEO has to think about those trade-offs. And so obviously you're going to want to think about where you're investing in top tier intelligence per unit, and where you just need to be efficient because it's just par for the course, right? And you don't want to fall behind your competitors, because can you imagine if it came out that you're spending $15 million a year on automated customer support by using frontier models, and your competitors are doing the same thing for $2 million a year, getting the same results or better results? Like, you'd look like a fool. And so you want to think about resource allocation here, just like you do in any other area of the business.
I mean, you can invest that capital towards pushing the frontier and building new products or doing your business better, or whatever you're doing now better. So CFO's turn, like why aren't they chiming in today? But
I mean, the hard part about being a CFO in this world is token prices can spiral out of control very quickly. And if you haven't budgeted for that, then you could be in trouble. So when you have something that has such variability on the expense line, you need to put tools in place to measure and monitor it more succinctly. So I think CFOs are probably going to be a big driving force behind the token minting movement and token engineering for efficiency, because you read these stories that, I don't know if the number's accurate, but somebody reported that Uber had spent $500 million with Anthropic in 2026 already, which is crazy.
Yeah. And they blew through their full year budget in just a few months, right?
Yeah.
And so everybody, I wonder where the limits are coming from. Is the CFO running in the office like, bro, like what's going on? And like, the CTO's probably trying to just keep up with how the market's moving and deliver value, right? And so that's hard enough. Let alone managing the costs. I'll take the COO one if I'm, as I talk to board members and people who run corporate treasury and things like that, a light bulb goes off for some people who care about this, like chief purchasing officers. And I'm like, what about supply chain risk management? And in that world, they're like, oh, I hadn't thought about it that way, but that's going to matter. And so if I'm a COO, I'm probably interjecting, thinking about the risks of our supply chain with intelligence and AI vendors under that umbrella. So before we wrap, where can people learn more about this movement? What kind of resources are out there?
Yeah, I mean, obviously come to our website, neurometric.ai. You can find a lot of it, or you can go to tokenminning.com and you can read the manifesto. You can learn about, you can see some resources that are out there, and you can participate either through our Discord channels, our Reddit group, sign up for our newsletter, any of those things.
And on tokenminning.com, this is like, something we want to give to the industry. There's like a tools directory. People can contribute to this.
Yeah.
Right?
Yeah. Particularly if you make a tool that helps with inference optimization, definitely submit it to the directory.
Awesome. Well, we appreciate everybody's time today. Thanks for listening in. If you enjoyed today's episode of Token Engineering, a show about AI economics and the cost of thinking, then please be sure to like, share, and subscribe to the podcast. We're going to put links into the show notes. Thanks.